Hello guys, Saksham this side from BBA FMA and I am here to tell you about the three accounting concepts which are materiality concept, going concern concept and full disclosure concept. So now let's begin with the materiality concept. This concept says that all the material items should be reported properly in the financial statements. Material items are those items whose inclusion or exclusion will result in significant changes in the decision making of the users of the business's information. So for example, a company's annual revenue is rupees 500 crores and an item of rupees 200 may be omitted from reporting. So this will work, and materiality concept is really important as it provides relevant and steady information to the business. So guys, now let's talk about the second accounting concept, which is the going concern concept. Going concern concept is accounting fundamental principles which says that the business will continue its operation in the foreseeable future and will not be forced to liquidate its asset. For example, if a store has steady sales and meets its financial obligations, pays its debt on time, is a going concern business. And to determine if a company is a going concern, they should look for multiple warning signs which will tell them about their financial distress. Steps like reviewing the financial statements for ongoing losses or checking if the company is able to pay its debt on time will help in the analysis. So guys, now let's talk about the third concept, which is the full disclosure concept. This concept says that the business should reveal all the necessary information in their financial statements so that the users who read the information are in a better position to make decisions about the business. There are two types of users: internal users like managers, owners, employees, etc., and external users which are investors, customers or potential investors. Now let's take some scenarios where disclosure is mandatory. If a company is facing a lawsuit, this contingent liability must be noted in the accounts. Or if the company has paid loan to directors or related parties, this should also be written down in the financial statement. Now I am starting with the real world applications by taking one Indian company and an international company. Let's begin with Deloitte, an Indian AS company. Deloitte's updated guidance emphasizes that going concern assessments should extend beyond the minimum 12 months period. And their guidance to audit clients is that if material uncertainties exist, even in close call scenarios, everything should be fully disclosed. And for example, Deloitte might work with a client facing economic stress and advising them to include a detailed going concern note about the cash flow projects and all the scenarios. And now let's begin with an international company, Amazon. While Amazon's 2023 annual report showed a strong performance like a free cash flow, robust revenue, the company must prepare all the undergoing concern. Now let's move on to an international company, Amazon. While Amazon's 223 annual report showed a very strong performance with a free cash flow, still the company must prepare under the going concern assumption as per the IFRS framework. If material uncertainties exist, Amazon would need to implement full disclosure, explaining the management's risk and the risk factors, mitigating any strategies, not only in the notes but also in audit opinions. Even though Amazon's financial health appears solid in 2023, the practice of fully disclosing assumptions and forward-looking risk remain central to maintaining stakeholders' trust. So let's move on to the critical reflection. The critical reflection on stakeholders is that the investors rely on clear disclosures and assurance that a company will continue operating. Regulators and auditors monitor going concern judgments and demand transparency around uncertainties. Today, we saw how Deloitte, through its guidance, champions rigorous going concern assessments and transparent disclosures, and how Amazon, as a globally listed company, adheres to those principles, ensuring financial trustworthiness. The key learning is that firms and advisors must rigorously assess going concern assumptions and also fully disclose the material. It's not just compliance, but the foundation of stakeholders' confidence. Thank you.